Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, August 11th, 2008. Well, today was a key day in the markets, and we're going to discuss why, but we kind of set the stage for this on Friday in Friday's video, so you can always go back and check out what we said in Friday's video. What we basically looked at was a monstrous rally last week, and we said on Friday after we rallied again that Monday was going to be a key barometer of what we were going to expect for the rest of options expiration week. Now, this week, again, as I just mentioned, is options expiration, and everything about this week is volatile, and you have to assume that, and in today's trading activity, that's exactly what we saw. We saw early massive gains come up, then after lunch a hard sell-off, and then a rebound into the close a little bit. And we're going to set the scenes about what we're expecting later this week, as I just mentioned. So we're going to get right into it, but what I want to touch on first is what the markets did. The Dow was up about 48 points, the Nasdaq climbed 26 points, and the S&P was up about 9 points. Not a huge update by any stretch, but the fact of the matter is, this market is coming off a huge week last week, and it's showing us more gains. Now, many people would say, well, that's bullish. Well, yes, it is in the long term, and InTheMoneyStocks.com agrees with that aspect in the long term, but what we don't agree with is that in the near term is that it's bearish. It actually is bearish in the near term that we were up today. What you really wanted to see today was a pullback day or a pause day going into this options expiration week. In tune with that, you could look for more gains later this week and so forth. Now, the fact that we were up again today, this market has gotten a little too far ahead of itself. And considering options expiration, and we coined the phrase Whipsaw Wednesday. We've people in the chat room have called Tuesday Turnaround Tuesday for massive reversals and such of that options expiration week. You have to anticipate here a pullback in this market. So overall, we're going to begin to take a negative stance in the near term. And when I talk about near term, I mean next couple days. Now, it doesn't mean we're going to be down tomorrow necessarily right away, but we're thinking Tuesday or Wednesday should be a down day in the market, and we may see a little more downtime over the next few days as well after that. You just have to look at it from a broad picture. And I'm going to go right into the charts here, and we'll look at the intraday, and then we're going to go back into what we were talking about here on that longer-term period over the next couple days. Number one, let's take a look at this market. We know the market was up again today, and early on it was all about oil. Oil dropped again, and we're going to touch on that because we looked at it in the video on Friday and talked about some key levels. We didn't quite get there today, but we're getting close, and we're going to focus on that because at some point, personally, I'll be looking at a possible scalp play to the long for a quick day or two swing trade for a rally in this oil market when finally things do wash out. And that's fine. You want to keep an eye on that. But what I want to first go over is the intraday patterns here, guys. And what you're going to see here is the market really right around 9:30 began to rally. All right, you see the initial push up right here at 9:30, and these again, this is the S&P futures, the E-minis, S&P 500 contract for let's see what September '08. And what you're going to see here is that this is the 10-minute candle, so you can see a rally till about 10 o'clock. Then you had a little bit of a 10:30 pullback, and then really off to the races again. And what was going on right here in the market was you had oil pulling back, and oil began to drop pretty drastically. You had another bullish pattern formation and a breakout to the upside, and you basically ended the day here with 3 green bars up on the high note. And then the market began to pull back, and that's what we see here. Pull back as oil starts to rally into that 2:30 time frame. Now, right around here, and we'll draw that line up, right around here, you see that the 2:30 time frame, this is when oil closes. Oil closes down just slightly on the day after being down as much as $2 and change today, and the market started to just bounce around after that. And you can see that they started to bounce up, then they sold off again, made a new low, and we always talk about this, guys. Remember, when you have a low in the market that seems to be significant like this, and they take out the low by a tick or two like this, where they took it out by about a point, oftentimes that's just getting the longs out of it. It's taking the weak hands out by stopping them out. And who's collecting those shares when they get stopped out? Well, the market makers, the bigger institutions, the big players, and they begin to push the market right back up and rally it right up off of that level. And then who's buying back? Then they're selling it off here to the little guy again who's saying, oh, we're back above that level, let's buy it back. So it's kind of something you always want to keep in mind, folks, is that keeping a stop a tick below the low is not always a good thing because they always push it through that. And there's another example. I've shown over the last couple weeks multiple examples of this. So that's the intraday market, but I really want to focus now on the daily market here, guys. All right, and I want to flip to the ES futures. Let's start with the SPY first. what we saw here is a monstrous rally last week, more so on the NASDAQ than anything. The NASDAQ in technology has been a monster out there recently, and it looks like the NASDAQ personally could use a pullback, and we probably will see that in the coming days. Again, could it be a pause day and then a pullback? Yeah, it could be that, but really you're getting a little too extended here to continue with the size of the gains we're doing. You've had a couple last week, you had a couple days where we were up 300 points. Today, then the Dow was up another 50 points, the S&P was up 9, the NASDAQ up 25, and it's just getting a little too extended here in the near term. All right, really just from the lows last week, this is the move you've had. Now, we did breach the 50 moving average, and the key tomorrow is going to be, do we start to pull back off of this, or do we have one more little push? And I want to show you something on the chart of the ES where if there's going to be one more push, it's going to be right to this level. Now, it's somewhat of a long shot, we feel, where the odds aren't necessarily favoring it this touching, but it very well could because it's such a key number in this market. So let's flip over to the ES futures and look at the S&P futures here. If you draw a line from these top levels, it comes to a direct calculation of this point, all right? And I have to flip it off there so we can get it back. But really what you're seeing here is the move up. This candle, this is a lot of resistance. If we touch this, it's a dead sell signal in our opinion, okay? So watch that and see how today's candle traded all the way almost that high and didn't quite reach it. So you're going to look for this level to be touched. If that level gets touched tomorrow, it's, in our opinion, it's a sell-off starting, if not sooner. Today might have been it. That might have been it because we're just so extended. But you have to keep in mind that there's a small chance that we push up and touch that, and then you look for the pullback, all right? Now, on the NASDAQ, the key here, folks, is that this move is even more accentuated. I mean, this is just an absolute blowout move on the NASDAQ. Look at this point right here. This was the low last week on the NASDAQ, right off the 20 moving average, and look at this extension move to the highs. This move alone from the lows to the highs was from approximately 2280 to a high today of 2461. That's 180 points higher. Unbelievable, folks, for in 1 week for the NASDAQ to do that. You're talking about an 8% gain, even thereabouts. And now you're beginning to look at some resistance points. And I want to point out the resistance points on the NASDAQ because we do feel that the NASDAQ got well ahead of itself as well and should pull back. All right, and one thing we need to remember is that by no stretch is this market out of the woods. All right, financials, all it takes is for one company tomorrow to come out with some financial jargon, and say something not as good as people are expecting or hoping, and you're going to see a drop in the financials, which will lead the market lower. In addition, and just touching on this NASDAQ quickly, folks, notice the NASDAQ, I drew in this resistance level right here, and it's really anywhere between these 2 points. We're almost there on the NASDAQ. So just like the S&P futures had a tiny little bit more to go, the same thing applies to this NASDAQ. There's a small chance you reach this area right in here. At that point, that's going to trigger a hard sell in our opinion, and you'll come down for a few days. It's not going to be anything drastic. We still see some more upside after a pullback, but you got to anticipate that you could see a pullback here because the market's just gotten way too far ahead of itself. So watch this level. On my chart, it's approximately 2475 or so, give or take. So the NASDAQ closed today at 2439, so that would be about 35 points higher. Should it tick that level, that would initiate a sell. But it's very possible that we see a sell-off tomorrow just alone. I mean, it's at this point where, the odds of a sell-off tomorrow are probably like 70% in our opinion. If it were to get up to this point, it would raise it to that area where we would really like it, where it's 85 to 90% chance of a sell-off if it were to go here tomorrow. All right, so it's just a matter of the odds, and it's all about if you go to a casino, you want to know what the odds are in your favor or against you in any certain game. The same thing applies in the market. All right, here it's about 70% or so in your favor, maybe 65 because of the pullback. If it closed up here, I would have said 70 definitely, but maybe 65 here of a pullback. And if it were to get up in this range of major resistance, just like the SPY, you're talking 85 to 90% on the downside probability there. Okay, and that's partially its signals, looking at our 5 to 7 signals and seeing how many align. We're not seeing the 6 of 7 align that we use to trigger a market sell or buy program or a turn date, but we're seeing about 4 to 5 signals right here that may be enough in the market. So anyways, keep track of that NASDAQ and that S&P futures, and I'll put that up again. You can see right here. So notice how both charts coincide that they're near the key resistance areas. And again, if it were to hit up here, it'd probably be 85 to 90% chance of a sell signal coming through. We'll have to check those numbers again when we get there to make sure they're all coinciding and looking that way. Now, one thing I do want to point out, folks, is that China's market has been getting crushed lately. And the FXI is a good signal of this. Look at the FXI, which tracks China. Notice support coming in here on the FXI, okay? And I want to point this out primarily because at some point towards the end of the Olympics, I think that the Chinese markets is going to be a strong buy. And again, I'm no analyst, so obviously take what I say with a grain of salt. We just do this for educational purposes, and you should always consult your financial advisor. However, what I would say is that I think that people have overreacted to the economy slowing down in China after the Olympics are done. And I think it's a little overdone. And I think people, once factories start chugging again, because they've shut down a lot of those factories over there and taken a lot of cars off the roads. I think once things look like they're getting back to normal, you'll see a pickup in that market, and you should see a move up. So if this comes down in this range somewhere down here, it may be a good place. Obviously, maintain a stop as always. All right, folks, so keep in mind, tomorrow, this market's a lot overbought right now. There's a small chance we go higher, but as the higher we go here up to that line, you're going to look for a major reversal for a couple days, and then we'll possibly see a move back up. Take care. Have a wonderful day. We'll talk to you soon.